Okay, it's recording. All right. Hello, everyone. Welcome to episode 2 of the Financial Classroom. I'm your host, Will, and with me on the other side of the mic is Tim.
Yeah, so today we're going to be talking about credit cards, just a little bit of how do they work, how does the industry operate, and should you get a credit card for yourself? So we'll just start off this podcast just by talking a little bit about a few stats in the Canadian landscape around credit cards. So at the moment, 70% of Canadians pay off their credit cards every month. That comes from the Canadian Bankers Association, and they make it sound like it's a good thing, but that means 30% of people aren't paying off their credit cards. They failed to leave out that. They failed to mention that little detail there. So it's actually a lot of people. Like 3 out of 10 of your friends aren't paying off their credit cards. So it's obvious that it's an issue right now here in Canada. So we just wanted to address that a little bit. There's 76 million Visa and MasterCards in Canada, and credit card debt is currently the consumer debt that people deal with most. 40% of Canadians, according to the Government of Canada website, who have debt or who have consumer debt, have credit card debt.
I guess, like Tim mentioned, we're going to talk about credit cards, and I think today's podcast we want to aim to talk about the pros and cons of credit card. We want to talk about the mistakes that people have made with credit cards and how credit cards work, why people even use credit cards, and how do companies make money if they're giving out free flights or giving out points or giving out cashbacks. And so I guess we want to start off by just talking about our experiences with credit cards, personal experience with credit cards for Tim and I. For me personally, I use credit cards. I don't have any ill will or anything against credit cards. I do know they have a lot of cons or negative feeling towards them in a lot of the debt-free community. I'll just explain why I use credit cards briefly here. Between my wife and I, we have 3 credit cards between the two of us. We have 2 with our bank and 1 with Costco. So it's a MasterCard with Costco. And so the reason we use those credit cards is my wife and I, we're both super disciplined with our cards. We pay them off right away. So I guess a lot of times we get those cards is because there is cash back that comes along with our Costco cards, and along with our bank cards, there's flights that come with it. And I live in Saskatchewan and I grew up in BC, so we often visit my parents in BC. So we use those cards, and we've gotten free flights to BC for spending money that we would normally spend anyway. So Tim, you want to just touch on why maybe you don't have credit cards? I don't know if you do, but you want to just touch on that?
Yeah, for sure. So I've got 5 credit cards. Some would say that's too much.
Yeah, that's crazy.
But I do, and that's just how it is. One of them I have, it has no foreign transaction fees. And for me, my parents live down in Mexico City. So just for me to be able to go and visit them and to be able to use my credit card when I'm down there without having to worry about racking up those charges is huge.
Mm-hmm.
I also have travel credit cards. So I currently have about 1 and close to a half free flights down to Mexico sitting on there. I'm just waiting for COVID to clear up, but it's great to be able to get those free flights, to be able to rack up points, just spending money wherever I'm normally spending money and having it reward me down the road.
Yeah.
And then, I have a Costco membership or Costco credit card as well, like you do.
So
you might as well earn the cash back, right?
Yeah. Sorry to cut you off there, Tim. I gotta admit, I'm guilty for letting Tim sign up for that Costco Capital One credit
100%.
card. We actually went to Costco, and I tried to get him a membership, and he ended up leaving Costco with the new credit card. So
I joined the cult.
Yeah. So, sorry, finish what you were saying there, Tim.
Yeah, and then I've got my President's Choice one. I do quite a bit of shopping at Superstore, and then I've got my Simply cashback one that gets me good cashback at restaurants where yeah, it's 4% back I get on that, so that's pretty good.
Okay.
Anyway, I'm apparently a credit card junkie, but I am responsible with my credit cards. That's the important thing, and that's what we're going to talk about today.
That is the key, to be responsible with your credit cards. So, Tim, I'll just ask you quick, so you have 5 cards. Do you use them all for different stuff then? Like, so let's say when you go eat out, you just use that one that you get from a restaurant. And then when you go to Costco, you use Capital One, obviously, and then et cetera. Do you just use certain ones for certain things?
Right, more or less. So I find that my Amex gives me the most rewards. That being said, there aren't a lot of places that accept Amex just because they have a higher vendor rate. So a lot of MasterCard and Visa, for example, they're charging companies typically around 2%, maybe a little more for every dollar that's spent using that card. They're like, okay, yeah, we're going to take 2% of that $50 that you spent at Superstore.
Okay.
Superstore, you can keep the rest.
Okay.
Whereas American Express, I believe, is closer to 3%. I know that their rates are significantly higher than Visa and MasterCard. So that's why not everywhere accepts American Express, but I do get more points for American Express.
So you know where to do different cards. That's pretty, you're more on top of that than I am. So credit card junkie. So yeah. I guess we're gonna dive in to the pros and cons of credit cards. And
yeah.
Tim, you want to just touch on a few points of why you should get a credit card?
Yeah, sure. Actually, so I got a question this week from a friend of mine, Brooke, who was asking me about credit cards, and I just said, "Oh, this is really convenient timing. I'll bring it up on the podcast." And she asked, "Should I get a credit card? I'm a student. Should I get a credit card so that I can start thinking about building credit now, so that down the road I'm able to have a good credit score established?"
Okay.
So my response to her was, yeah, absolutely. If you're able to be responsible with the credit card, I said, treat the credit card like it's a debit card. Make sure you're paying it off regularly. Make sure you're not spending money that you don't have, because the interest rates are going to destroy you on these credit cards. Mm-hmm. So the big thing is, if you're somebody who you throw a credit card in your hand and you think to yourself, okay, shopping spree, then you're probably the type of person who shouldn't have a credit card.
Yeah.
But if you're somebody who's able to treat it like a debit card, then absolutely. So, and then I ended up she ended up asking afterwards, sorry. Okay, so I've got 2 options here for credit cards. Option number 1, I get lower interest rate, but 0 points. Option number 2, I get points, but I have a higher interest rate. Which of these 2 should I go to? So kind of going off that, you want to treat your credit card like it's a debit card. You want to be paying off your credit card regularly. Mm-hmm. So interest rate shouldn't be a factor when looking at credit cards, because you don't want to ever be dealing with interest rates for credit cards.
You don't want to pay
never, ever.
No.
Yeah, exactly. So definitely, if you have that kind of decision that you have to make, definitely go for the one with the points instead of the lower interest rate. I don't know if you would have anything to add to either of those questions, Will?
I think, like you said, being disciplined. I think there's so many good benefits with credit cards, and I think as a student, I had a credit card as a student, but I think the biggest thing, like if you walk into any university or any post-secondary school during the welcome week, like the first week where, they have all these booths set up and activities around the school, and I can guarantee you 100% of the time you will find some sort of credit card company set up with a booth somewhere in the school trying to get a student or trying to sign students up. And the reason they do that is because not saying that students don't know how to handle their money, but a lot of times people move out of their homes, and the first, they go to school, and a lot of times it's the first freedom that they have. And these credit cards company know that. And if they're not, and if these kids aren't disciplined with money and understanding how to spend their money, these credit cards company get them and they give them a card and be like, hey, we're extending credit to you. It's free money, basically. It's how they advertise it. And they don't talk about the high interest rate. Like some charge 20% interest rate, 22, 23% interest rate. They don't talk about that. So they're targeting young people who don't make a lot of money per se, and who are still learning about money, but they are already extending them credit. If you go to a bank and you have no history of borrowing, they're not just going to lend you free money for no reason. But credit card companies are willing to do that. They prey on people like that. So Brooke, to answer your question, I guess, like Tim said, if you're super disciplined with your money and you pay off and you treat it like it's debit card, then go for it. And then I guess that was slide into the point of why go for it without the interest, the pros of credit card. Tim, you want to touch on a few of the pros of credit card itself?
Yeah, definitely. So, I mean, Brooke already mentioned one of them, building credit. So that's something that's really not going to be a huge deal right now as a student, but hopefully down the road when you're applying for that mortgage, it'll make it easier for that to go through, because the bank will be able to look at this and say, okay, they've met every single credit card payment that they've ever been required to make. We can trust this person. Like, they've been trustworthy with $1,000. We can trust them with $200,000 kind of thing.
Yeah.
Definitely, we already touched about points or cash back. You might as well get the points or cash back from the everyday purchases that you're making, right? If you're spending $10,000 on your credit card every year, you get 1% back. That's still $100. I'll take $100 for free, right?
Yeah.
So, and definitely convenience. That's one we were talking about before the podcast. Is just so convenient to be able to whip out your card. For myself, I would be a little concerned personally going to the grocery store with $250 in my pocket, and just worrying about, oh hey, I've got a few errands to run. What if I lose my wallet? What if somebody lifts my wallet and I lose this money? Yeah. It's just so convenient to be able to whip out a card instead.
Yeah, and Tim, to touch on that 1% thing, we're not telling you to, like, if you're one of those people who are out there and it's like, oh, I'm spending money on my credit card, I'm paying off, but I'm spending extra so I can get those cash back. Don't do that. Like, you spend $10,000 to get $100. We're not telling you to spend extra just so you can get the $100. It's stupid. Like, if you are spending money on things that you would already spend on, and you're getting free $100 as a result, then feel free. But if you're spending money and be like, oh, I'm getting some cash back so I can spend a little extra, you're actually losing more money in the long run by buying unnecessary things. Yeah,
it's definitely a trap. Will was just here in town the other day, and on my American Express card, they had a promotion going that if you spend $10 or more at a small business, then you get a $5 credit on your credit card. So I was very intentional right, exactly, due to COVID. So I was very intentional when using my credit card that I wasn't going out of my way to places that I wouldn't normally go to be able to get that $5 credit.
Yeah.
That being said, there was one or two times I switched. For example, my buddy and I wanted to meet up. We were going to go to Brewed Awakening, and I said, hey, like, let me cover your drink. No, he ended up getting his own drink, but we ended up going to this other place that accepted American Express, and I was able to get the $5 credit there. So
yeah. And for those who don't know, Brewed Awakening is a coffee shop. So
it's a coffee shop.
Yeah.
Thank you, Will.
You're welcome. Yeah, they'll be like, what the heck is a Brewed Awakening? So I guess, like Tim touched on that briefly, building credit, I think you can, credit cards help you build credit, uh, but they can also help you drag down credit in a way too. So be
Yeah.
really careful. You could build credit with a credit card, which is super helpful. I put my phone bill, I put my internet bill onto my credit card too. So at the same time, like we said, things that you have to pay already. I pay my water bill with my credit card too. So monthly payment that comes in automatically, I pay with my credit card. And as long as you have the money in your checking account, you're safe to do that because you know you can always pay it off at the end of the, the term or period. And another thing with credit card is if you know you might struggle with paying it off, for my Capital One card, I know there is a auto payment that they automatically do payment on the card when it's due, so it's never a late payment. But I guess the silver lining is that you always they say you have to have money in your checking account.
I actually didn't know that. You'll have to show me that.
Yes, so I never miss a payment on anything, but I still click that checkbox just so in case I somehow miss a payment or something. That way it'll automatically withdraw money from my checking account and then pay it off. This way I don't have to accrue interest, basically.
Yeah, and similar to that for myself, and I think you said you do something similar to this, is that at whenever I get a paycheck, and sometimes even more frequently, I just go through all my credit cards and I just pay them off.
Yeah. All five
I
of them.
don't, yeah, I don't wait until the very last day that they're due or anything like that.
No.
I just have a set rhythm so that twice a month I'm paying them off. So that gives me effectively 3 opportunities, because you get your 4-week period plus your 3-week grace period with credit cards. So that gives me 3 opportunities to pay off the credit card. So if I miss one, then if I miss one payment, then I'm going to get it the next time, or if not, the time after that. So.
Okay. Yeah, that's 100% true. I guess those are like kind of the main pros about credit cards. You got anything else that you can think of, Tim, for credit cards? For why people should get a credit card?
For why people should get a credit card, I guess the other reason would just be sometimes there's other incentives that the credit card company provides. They'll give discounts on rental vehicles, or they'll give warranty maybe for the first year on purchases.
Yeah,
actually,
while you said that, yesterday I actually got a letter in the mail. This is convenient, from TD, and it said that my credit card is changing to a different type of card. It's still the same, like flight rewards and stuff, but they, on top of that, now there's insurance for a phone. So like if I buy my next phone with my credit card, within the first 2 years, if you lose the phone or if you break the phone, you crack the screen, that's covered under this insurance because I bought it with my credit card, which is kind of crazy. So
I've never heard of that kind of thing before.
Yeah, so I just read it yesterday, and it's like if you crack your screen, or if you dropped it in water, or it has water damage, or you lost it, you can call this number. And if you bought the phone using your credit card, and if you make monthly payments using this credit card, it's covered under their insurance. So, and I know for traveling in the past, we've traveled, and our credit card comes with medical insurance also. So that's like extra things. Like let's say if you don't have credit cards, maybe you have to buy medical insurance if you go travel, right? So
right.
Another reason why you will want to look into credit cards. So
yeah, definitely. So I guess we talked a little bit about credit score there. So just to add a little more information for those of you who maybe aren't familiar with credit score. So it's comprised of a few different items that create your score. So there's your credit history. So if you've been making payments on time, things like that. If you're missing payments, that's going to lower your score. And I guess the number of different applications you've made for different types of credits. If you've made, for example, 5 different applications, maybe 3 credit cards, a line of credit, and a mortgage, all within the same period, that's going to trigger a red flag and lower your credit score as well. I guess utilization of credit. So, I mean, between my 5 credit cards, I've got like maybe what, 19,000 or something like that in credit limit.
Oh man.
So I guess I was reading on Canada.ca that they say that you should keep your credit utilization to 35% or less, or else you're going to start setting off those red flags and lower your credit score.
I think.
And then, go ahead.
Oh no, finish your thought.
Okay, I was just gonna say the one other one that I have here is credit mix. So basically, it'll increase your credit score if you've got, you know, line of credit, credit card, mortgage, you know, a mixture of things. But that being said, I wouldn't go out and just open a bunch of credit accounts just to increase your credit score personally.
So I guess this is a tip before we touch on the cons next. On getting your credit card. If you have a credit card and you don't know whether or not you're going to be responsible with your credit card, what you can do is set the limit to a certain amount. So let's say if you just set the limit to only $300, instead of some people have like a $5,000 limit. Me personally, I have a $3,000 limit. But let's say if you just set a limit to a lower number, like even $200-$300 as a university student or someone who's just getting their first credit card, and if you max out that $300 and you don't pay off in time, you know a credit card isn't right for you, right? But this way it gives you a chance to not max it out to the point where, for example, if you're like me, you have $3,000 credit limit, you max out to $3,000. Now you're in a way bigger hole than if it's just $200-$300. So that's a tip for anyone out there who doesn't have a credit card right now, or who's thinking about maybe getting a credit card or not getting a credit card. If you do get a credit card, just set the limit to a real low limit, and then see if you can pay off in time, and then go from there. So,
definitely.
Yeah. So
do you find that, like, I find personally that the President's Choice MasterCard, they keep wanting to bump up my credit limit.
I get that in the mail all the time. Like,
saying,
I get that stuff in the mail all the time. Like you're eligible for a credit limit or a credit, whatever, extension, or your, etc. I usually just rip that up and throw in the trash, because if you pay it off right away, you don't need that credit limit.
Exactly.
Right. So
I think during school, I just kind of needed enough to be able to pay my tuition on credit card, because, you know, free points, why not?
Yeah.
And then,
but you pay off.
Yeah, I really have no reason to have more than probably about $1,500 in credit right now.
Yeah. So,
but
okay, that's
but just because that's how my credit cards came, and I'm too lazy to make a phone call.
Exactly. All right, let's talk about the cons.
Yeah.
What are the cons of credit cards, Tim?
I mean, the big one here, interest.
Yes.
Interest rates tend to be around 20% or so on the average credit card, whereas, you know, a line of credit, you're probably looking at between 5 and 8%, somewhere in there. Mortgage, you're looking at mortgage right now, you're looking at maybe 2 or 3%. So it's a very high interest rate on credit cards there. So avoid it at all costs, really.
Yeah. So for people who don't know why credit card companies set such a high interest rate, is because credit cards are a high risk loan. Basically, there's a lot of people out there who default on their credit cards, and in order for companies to make money, they need to set a high interest rate to make enough back to make money. Because if you're in the business of losing money, that's not going to be successful. So with so many people defaulting on their credit cards or not being able to pay their credit cards back, this is why companies have to set such a high limit on those interest loans. So
right. Yeah. And that's actually going back to credit limits. That's also why they have credit limits in place, is because they don't want you going out and spending 30 grand on your credit card and then saying, oh, whoops, I'm bankrupt. I'm not going to be able to pay you back. Here, how about you take, you know, $3,000, or trying to settle or anything like that.
Yeah.
So they just want to avoid that at all costs. Once you prove trustworthy, they're willing to increase your credit limit.
Yeah. So
So
another con with the high interest rate, it relates to digging yourself in a hole fast. So
yeah.
if you don't make a good income, or if you have a hard time with finances or dealing with figuring out your finances, let's say you have a credit limit of $1,000 and you end up maxing out your credit card and you have $1,000, and now with the 20% interest, you're looking at 200 extra dollars that you're paying, right? So,
Yeah.
and then everyone's heard of compound interest, where the interest compounds on itself. So if you can't make that $1,200 payment, that interest will add on top of that interest. So for those that don't know, you're now paying interest on $1,200, and then the next it just keeps going up and up. So you're digging yourself in a bigger and bigger hole,
Mhm.
which is very dangerous. So that's a big con about credit cards for sure.
Yeah, and just another sidebar here. This is a great time to talk about minimum payments. This is why the credit card companies love it if you make your minimum payments,
Mm-hmm.
because they're able to just keep charging you interest again and again and again. They let it keep building. It's free money. They aren't giving it to the company where you bought your TV from or whatever it is that you
Yeah.
bought there. It's just money that keeps on racking up, and it's they aren't even working for it. They're just letting you just, leave that bill sitting there
And
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 and just let it grow.
and people often make that mistake because I guess we'll later we'll talk on the mistakes people often make, but I'll just touch on this real quick because people see that minimum payment. Same with like student loans or like any debt repayment. Like they see, you just need to make this minimum payment, and that minimum payment, like $1,000, it could take you 3, 4, 5 years to pay off $1,000 if you're just making the minimum payment. And on top of that, you've paid hundreds, if not more than the original principal in interest to the company.
Yeah, I think I was reading an article the other day, and they were explaining how if you bought something, it might have been a TV or something like that, that it would take like 20 or 25 years to be able to pay it off if you only pay the minimum payments.
Oh my goodness.
Like, it's insane.
That's nuts.
Um, I guess another con to credit cards would be just the various fees that, on top of interest that they can charge you for. We talked about foreign exchange fees. So if you use your MasterCard down in the United States, or even order online from a US store,
Mhm.
then they'll charge you usually around 2 or 3%. I think 2.5 is kind of the standard going rate on top of that purchase, just as a banking fee.
Yeah. And on top of
Other
that, often credit cards will charge you an annual fee to use the
Yeah.
credit card.
Yeah. Yeah. So not that annual fees are necessarily a bad thing. So for example, I've with my American Express, it's $10 a month. I should get sponsored by American Express. I keep talking about it. But I keep paying $10 every month for that. But the reason that I'm willing to do that is because they said, hey, you do this, we're going to give you points that will ultimately get you most of the way to a free $800 trip down to Mexico.
So unlike
So
Tim, because I don't have 5 credit cards, I'm my credit cards, because I'm in a specific banking plan. My credit, and you have to have a certain amount of money in the bank, and then the credit card is free. So I don't actually pay a single dollar for any of my 3 credit cards. So if you're out there and you can pay $0 on credit card fees, I would recommend you do that.
yeah, and I mean also with credit card fees, often they'll give you more points if you're willing to pay that fee.
Mm.
But it requires a little bit of calculation on your end of how much do I spend each month on my credit card? Will this pay off in the end?
Mm-hmm.
So for example, if your groceries get bumped up from 2% cash back to 4% cash back, then you can look at, okay, what's that 2% difference from me paying a fee? How is that going to add up? Is it going to be worth me paying $10 a month?
Exactly.
So it's one of those things. I'd probably generally say avoid it until you've done those calculations, but I'd probably err on the side of avoiding it unless you know it's going to benefit you financially.
Yes,
So
exactly. So
another downside of credit cards is just people. So research has been done and they've found that people aren't as uncomfortable if they use their credit card to pay for something versus cash. They're willing to pay more if they use their credit card than cash. So there
I
was a
think
study that was done. Sorry.
no, I think what you're mentioning is that emotional aspect, right? Like that.
Yeah,
The feeling of
exactly.
when you pay with cash, you see the cash kind of leaving your hand to somebody,
Yeah.
whereas when you're paying with plastic, via credit card or debit card or whatever cards, you're kind of just a tap away, and then that's it. So you don't have that emotional aspect. Not, I don't think everyone is. I personally don't think everyone is attached to this specific fact because I hate
Yeah.
spending money in general. So even tapping a credit card hurts me a little bit on the inside. but
Yeah.
but like continue your thought. I think that's kind of what you're saying.
Yeah. So a study was done. It was done by Michigan Institute of Technology. I was reading this on their website, and they ended up giving a test group of people some money. So they gave cash to half of them. They gave credit cards to the other half, and they said, okay, so there's this sold out Celtics game, I think it was,
Mm-hmm.
and they said, how much are you guys willing to pay for tickets to this game? And they found that the people with credit cards were actually willing to pay twice as much as the people who only had cash.
Wow.
Yeah. So they're, not to say that everybody's that way, like you said.
I wouldn't have paid
But
any because it's the Celtics.
well, maybe they're playing the Raptors. That's probably why it was sold out. But
Sorry, continue your thought there. For those who don't know, I'm a
yeah.
big Raptors fan. Big Raptors fan.
Yeah, rip. Yeah, so that was so they found that people were willing to pay twice as much with the credit card on average compared with cash. So I mean, we talked a little bit last week about budgeting,
Mm-hmm.
and for me personally, I've found that that's played a big difference in when I'm at the store, even though I have a credit card. It still hurts me with anything that I buy.
Yeah.
That's even a little bit more expensive. If I go to the store and I'm like, I want to buy some salmon or steak, I'm like, no, I don't think I can bring myself to do that unless it's like 50% off or something like that.
Yeah, exactly.
It's so I feel like budgeting has trained me to just really think about every dollar that I'm spending is taking $1 away from my house that I want to buy eventually.
Yeah.
So, but a lot of people don't think like that, right?
Yeah.
A lot of people, it's as long as my expenses are less than my income and I have money in my bank account at the end of the month,
Mm-hmm.
then we're good. But credit cards make it hard to track that.
Oh yeah.
So it's easy to get into that mentality if you aren't being intentional with your money.
Mm-hmm.
That okay, I'll just put whatever on the credit card, and then get to the end of the month and I'll just pay it off.
Mm-hmm.
But then it's draining your bank account a lot more than you think.
Oh yeah, 100%. And then some people spend too much that at the end of the month they realize that they don't have enough in their checking account to pay off their credit card, right? Then that becomes exactly, and becomes an issue down the road. So any other cons that you can think of, Tim?
I guess definitely one other con would just be it gives you the ability to shop from home.
Yes.
I've heard of, it's become a sensation lately that people are, they're quarantined and they have time to shop.
Yeah.
So, and hey, why not boost the economy a little bit, right?
Why do you think Amazon is becoming one of the biggest, companies out there, right? Because people are online shopping nowadays with their credit cards. So,
Yeah.
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 So I
And
guess that kind of touches on all the different cons. So I guess summary of the cons is the biggest thing is the high interest rate. It gets people pay off your credit card right away. Don't dig yourself in a hole because once you're in, it's hard
yeah.
to get out, right? So I guess we'll transition to mistakes people often make with credit cards. This is almost very similar with the cons or the bad reason to have a credit card. Uh, I guess one of the mistakes that people can make with credit cards is they use credit cards to get a cash advance if they need cash
Mm,
quickly. So for those who don't understand what a cash advance is if you would take your credit card and you can put money into your checking account, even though you're borrowing from your credit card to put it into your checking account, and you can withdraw that money out from your checking account. You're basically getting a quick cash advance, and the interest rate charged on these are typically higher than regular purchases. So it's like getting a line of credit, but with your credit card, if that makes sense, Tim.
yeah. Yeah. And if I'm not mistaken, they charge you an upfront fee often on cash
Yes.
advances as well.
Yes. So this is a funny story. I actually made a mistake so I, like I said earlier in the show, I've never ever paid a single cent to interest to credit cards before. I think this was a year and a half ago, maybe. I was paying off my bills, like my phone bill, whatever bill I was paying off. So instead of putting money from my checking account into my Visa, my credit card account, I did the other way around by accident on my like online banking. So I transferred the amount from my credit card to my checking account. And then so one day I was looking, I got charged 37 cents for interest. Um, and then so I called them up and then they realized it was the mistake. So then I got the 37 cents back, but it's the principle. But if you overdraft or if you use your cash advance, they do charge you up front.
Yeah, that's pretty wild. They get you twice there.
Yeah, yeah. So that's a mistake that people do make with credit cards. You got another one, Tim?
Um, yeah, I guess um yeah, I guess one big one is that people, they'll sign up for multiple credit cards
Mm-hmm.
and they'll just lose track of them. So, I'm a very responsible person, but you know,
So if you basically what
yeah,
Tim is saying is if you can't handle credit cards, don't be like Tim and get 5 credit cards.
yeah, exactly. You have to be well organized in that way. You have to
Yes.
have a plan so that you're, check mark, check mark, check mark, check mark, and
And
yeah,
you're checking your credit card, like I don't know how often Tim checks his credit cards, but for me, anytime I spend something on my credit card within the next 2 or 3 days, I'm paying that off. I don't wait till the end of the month to pay it off
yeah,
personally. I actually do it a few days after because I just like to keep on track on top of all my cards, especially with
mhm.
there's 3 cards between the two of us. So keeping on top of that. And then this way, like, like we mentioned earlier, you never have to incur interest.
Yeah.
So
Yeah, so that's like I said before, that's why I I pay my credit cards multiple times a month. That's one of the reasons why I pay them off multiple times a month,
mhm.
is so that it is because that is a risk, right? With
Yeah.
having multiple credit cards, is that, oh hey, I paid off two and I forgot the third. I paid off four, I forgot the fifth. And then you're paying that interest, and it may not be till a month later that you're realizing, oh hey, I forgot to pay off this credit card
Mhm.
and there was $1,000 on it, and now maybe I'm paying $20 or something like that in interest.
Yeah.
So
Yeah. So I guess this episode was talking about credit cards. We're in no way telling people to get credit cards. We're not telling people not to
right,
get credit cards.
right,
We're saying look at your own personal situation and do your own research and figure out whether or not you can handle credit cards. If you've been stuck in a hole with credit cards in the past, then I would recommend you not to get a credit card, right? It would
You
be
don't
like,
give a beer to an alcoholic.
exactly. So if you struggle with debt, or if you struggle with figuring out your finances, or if you struggle with, you know, getting a credit card in the past, then I recommend you not to get a credit card. If you're like Tim and I, who love finance stuff and who are very on top of our finances, then you might as well get a credit card and get the benefits out of that. So
Yeah.
it's such a personal thing for each individual. So this podcast isn't telling you what to do, but it's more of a information about credit cards, and, you know, and that you decide yourself.
And can I just add one more short topic of conversation here? Prepaid credit cards. I was really curious to look into these coming into this podcast, because there's something that's growing more and more. And, you know, Will and I, we are very, very interested in Dave Ramsey. We follow him. We love a lot of his principles. I mean, obviously we don't agree with him necessarily fully on credit cards, but a lot of his followers and a lot of people in general now are using prepaid credit cards. So Koho, President's Choice came out with a prepaid credit card this week. Yeah. So I did a little digging into those and just figuring out what they're about. My understanding was that they're effectively just a credit card, but that it won't actually let you take credit on it. But actually, from the research that I did, I found that they don't actually build credit, so they aren't contributing to your credit score. So that's just something to know before getting one of those. You know, they don't require a credit check, obviously, because you aren't building credit with them. You get lower points on them in general. That's another thing. And you can actually have paychecks deposited to some or all, maybe, prepaid credit cards. So they're effectively really just a debit card is the way that I see them, except you
I think people
use them in credit card situations.
Yeah, exactly. So they can buy stuff online if they want to. Or, you know, like if you book a hotel, I don't know, some hotels take prepaid credit cards, but some don't. But things like that, like that's why I think
rental car companies.
Exactly. So yeah, exactly. I guess so. We're nearing the end of this episode, and I guess Tim, we're just going to end with some interesting facts about credit cards. Tim, you want to say a few, and I can mention a few?
Yeah, I mean, I think I mentioned all the main stats that I found right at the start there. But
okay.
If you want to share a few that you found, that'd be great.
Sure. So right now they're Canadian, as a Canadian podcast, right now we owe, give or take, around, this is according to the Financial Post, around $4,240 on our outstanding balance on credit card, and it's may potentially increase to $4,465 at the end of 2020. So now we're looking at almost $4,500 of balance on a credit card with potentially 20% interest, right? So yeah, that's dangerous. And for Americans listening out there, the Americans have an average balance of $6,200 according to USA Today.
Does that mean that we're better than Americans?
That is not what he's saying to our American listeners out there.
Because I mean, that's like what, $8,000 Canadian. So that means they're like twice as much as us.
But it's just to say, like, credit cards can be a good thing, but it could kill people, like, financially. So
yeah, definitely.
Moral of the story, you know, do what you want with your own finances, but we would say get a credit card, like we said earlier, if you understand how to do it, how to deal with finances and pay it off on time, but don't if you struggle to pay it off. Correct, Tim?
Yeah. Basically, think of your credit card as if it were a debit card that gives you more points, that gives you money back.
Yeah.
So don't spend what you don't have.
Yep. Cool. Well, I guess we'll end the episode there. Thanks for listening, guys. And we're still a pretty new podcast, so we're looking at trying to get more episodes out. For those of you listeners right out there, we are now on Instagram. We're on Facebook. You could search us on Instagram. We're Financial Classroom, at Financial Classroom, and Facebook you could search the Financial Classroom. And if you guys want to leave us a review on any of it, and usually before an episode, we'll make a post about what the episode will be about. And then if there's any questions, like a day or two, we'll make a post about it. And if you got any questions, just comment below and we'll try and touch on it on the podcast. We also have an email. Tim, do you have the email handy with you?
Oh, yeah. So the email is financialclassroom@gmail.com.
Yes.
Financialclassroom@gmail.com.
Yeah. So if you have any questions or anything financially related or any life stuff or any episodes topic that you want us to touch on, feel free to email us. Yeah. And we're on Spotify already, Cashbox, Anchor, Google Podcasts. We just got on. We're still working on Apple Podcasts. We're trying to get on more platforms as the next few days go by. And then thanks for supporting us. And well, we enjoy doing this, and hopefully we'll be doing more. Any remarks, Tim?
No, just treat your credit card like a debit card.
Awesome. Thank you. Talk to you later, guys.